Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really doing. Today, we're diving into the world of Adlai Nortye, a drug research company, and let me tell you, their financial report is a bit like a roller coaster, some ups, some downs, and a whole lot of twists and turns. Buckle up, ready for the headline? This company lost over $100 million. Woof! Let's see what happened. Okay. So this isn't the original report. This is actually amendment number 1, meaning they had to fix something. Turns out, they forgot to include some financial statements from 2021. Oops! Basically, we're getting the full picture now. First things first, this is a Form 20-F, which is what foreign companies use to file their annual report with the U.S. government. Adlai Nortye is based in the Cayman Islands. Think Sunshine and, well, holding companies, but does most of its work in China. This report covers the year 2023, ending December 31st. So, everything we're looking at is for that time period. The main office in the Cayman Islands is basically just a P.O. box. The real action happens in Hangzhou, China. The big boss man, Yang Lu, is running the show from there. If you want to buy stock in this company, you'll be buying something called American Depository Shares, or ADSs. They trade under the ticker symbol ANL on the Nasdaq stock market. Basically, it's a way for Americans to invest in foreign companies without having to deal with foreign stock exchanges. As of the end of 2023, there were about 110 million shares floating around, split into two classes, A and B. Class B shares usually have more voting power, meaning the people who own them get more say in how the company is run. This company is a non-accelerated filer and an emerging growth company. That basically means they're not a huge, established corporation yet, and they get some breaks on how quickly they have to follow all the rules. The folks at Mazars USA LLP, located in New York, checked the company's math. Just a quick recap. They forgot the 2021 financial info, they're adding it now, and this report doesn't reflect anything that happened after they filed the first version back in April. Now that we're done with the cover page and legal stuff, let's move on to the fun stuff. Or maybe not so fun, depending on how you look at it. Basically, if they make a mistake, they can claw back bonuses from the big guys. So, gotta be extra careful with those numbers. We're jumping to item 8, financial information. This section contains all of the financial reports from the company. From time to time, the company might get sued or have to deal with legal stuff. But right now, they're not in any major legal battles. The board of directors decides whether or not to share the wealth. If they do, it'll depend on how well the company is doing, how much cash they have, and a bunch of other factors. If they do pay out dividends, the folks holding those ADSs will get their cut in US dollars. No big changes since the end of 2023. Keep calm and carry on. They chose to show everything and the kitchen sink, giving us more details to chew on. Now, let's check those previously forgotten financial reports. Okay, here's where things get interesting. Let's look at the numbers. In thousands, so add 3 zeros to each figure. Adlai Nortye had revenue of $45.7 million in 2021, $5 million in 23, and 0 in 22. Weird, right? Running a business costs money, and Adlai Nortye spent a good chunk of it on administrative stuff. Think salaries, office space, etc., and research and development. After all the money coming in and going out, they ended up with a big operating loss. This means they were spending more than they were earning. They did have some other income and gains from things like investments. They also had to pay finance costs, which is basically the cost of borrowing money. Put it all together, and they lost a whopping $56.6 million in 2021, $58.7 in 2022, and a mega $104 million in 2023. Ouch. They also had some losses from translating their financial statements into different currencies, which is just a normal part of doing business internationally. If you owned one of their shares, you'd be losing $2.23 in 2021, $2.31 in 2022, and $2.42 in 2023. Not exactly a winning lottery ticket, huh? Looking at what they own, they have a lot of cash on hand. That's good. They also have some financial assets and other things that can be turned into cash.
They also own property, equipment, and some right-of-use assets. Think of those as things they're renting, like office space.
Now for the debts and obligations. They have to pay suppliers and other bills. They also have loans they need to pay back.
They also have some weird stuff on the books that they owe from financial liabilities at fair value through profit or loss.
Most shares were canceled to make room for the new ones. It's like cleaning out your closet to make room for new clothes. This is basically extra money they got from selling shares. This is money set aside for employees to buy stock in the future. It's like a little piggy bank for employee benefits. This is money they lost because the value of different currencies changed. This is the total amount of money they've lost over the years. It's basically a running tally of their losses. Overall, they had a major deficit. This is just a breakdown of how the company's value changed over the years. Let's see where the cash went. They lost a lot of money, which means cash was flowing out of the company. They bought some equipment and financial assets but sold off some others. They got a bunch of money from selling stock, which is good.
They also took out some loans.
In the end, their cash went way up in 2021, down in 2022, and then up again in 2023.
In short, Adlai Nortye is a company that's all about researching and developing new drugs. They have a bunch of smaller companies under their umbrella, spread out across the globe.
They follow a specific set of international accounting rules, and the report assumes they'll be around for the foreseeable future. They have to consolidate all the smaller companies' financials into one big report. It's like combining all your bank accounts to see how much money you really have. Some of their assets are valued based on fair value, which is basically what they could sell for in the open market. If something loses value, they have to write it down. They have to tell you if they're doing business with anyone who's related to the company, like family members or close associates. They own stuff like equipment, and they have to depreciate it over time. It's like saying your car is worth less each year because it's getting older. They have to write off or amortize their intangible assets, like computer software, over time.
They expense research costs as they go, and they only capitalize development costs if they're really sure they're going to pay off.
They have to put all their leases on the balance sheet, which makes their assets and liabilities look bigger. They categorize all their financial assets, like cash, investments, etc., based on how they plan to use them.
When they sell an asset, they take it off the books.
They have to estimate how likely it is that people will pay them back and set aside money for potential losses. Just like with assets, they have to categorize their debts and other obligations. When they pay off a debt, they take it off the books. They use some fancy financial instruments like derivatives to manage their risk. Cash is king, and they define it very carefully. They have to set aside money for potential future expenses.
They pay taxes, and they have to estimate how much they owe.
If they get money from the government, they have to account for it properly.
They have to follow a specific set of rules for when and how they recognize revenue from their sales.
They give stock options to employees, and they have to account for those too. They have to provide retirement and housing benefits to their employees.
If they borrow money to build something, they can sometimes add the interest cost to the cost of the project.
Since they operate in multiple countries, they have to deal with different currencies. The biggest moneymaker is in the intellectual property.
Basically, the cost of borrowing money. They have to pay taxes in the countries where they do business, and they have to follow a bunch of complicated rules.
They didn't pay out any dividends. They lost money per share of stock, a breakdown of what they own, like equipment and buildings. They rent a lot of their stuff. Money they've paid in advance for goods and services. Investments that can fluctuate with the market. Money they've put in the bank for safekeeping. Money they owe but haven't paid yet. Money they've borrowed from the bank. Financial things that can change in value over time.
The different types of stock they have.
A summary of their past financial decisions, giving employees a chance to buy stock in the future.
They try to minimize risks and keep the company afloat.
Stuff that happened after the report was filed. A more detailed look at the company's finances. Okay, so that was a lot of information. Let's try to break it down and see what it all means. Adlai Nortye is clearly a company that's burning through cash. They're spending a ton on research and development, and they're not making enough money to cover it. However, They have a lot of cash on hand, which gives them some breathing room. Their future depends on whether their drug development efforts pay off. The risk is high, but the potential reward is also high. It's a classic biotech gamble. They also have to deal with the complexities of operating in China, which can be tricky for foreign companies. The stock is hard to value because they're not making money yet. It's all about potential future earnings, which are very uncertain. If their drugs succeed, the stock could skyrocket, but if they fail, it could plummet. All things considered, I'm neutral. I think this is a high-risk, high-reward stock. It could pay off big, but you could also lose your shirt. If I had to give a price range based purely on speculation and a little bit of hope, I'd say maybe somewhere between $1.50 and $300. But honestly, it's a total guess. So, there you have it. Adlai Nortye, a company with a lot of potential, a lot of risk, and a whole lot of numbers to crunch. If you enjoy decoding companies as much as I do, be sure to subscribe, hit that like button, and share this video with your friends. Thanks for watching, and I'll see you in the next one.